This is Boomer Life on CL 650.
Welcome to Boomer Life on CL 650. I'm Joanne Sutton. Today we're speaking with Jim Doyle, Senior Financial Consultant with Investors Group Financial Services. Are you where you want to be financially? A well-thought-out plan for your financial future is an integral part of building the life that you want for yourself and for your family. So, Jim, we're about to get into maybe a bit of a complicated concept, something that will be impacting the financial services industry in a major way. So major, it has its own acronym. It's a CRM2, and I'm hoping you're going to clarify this for us.
I'm not certain many investors are aware of CRM2, why it exists, or how it's being phased in. I think it could be a real game changer for how some advisors work. As my industry moves towards more of a profession, I applaud it.
Okay, so what is it? What is a CRM2?
CRM2, or Client Relationship Model 2, exists so that investors can answer basic questions about their investments and articulating the value clients get for their money. It's designed to increase transparency and accountability to investors. It's not about admonishing the advisor, it's about doing more for the client.
Is there actually a CRM1?
There is. It's been in phase for a number of years now.
Okay, so this is the advanced model. So what will actually happen as a result of the new CRM2 program?
We're going to see more on performance reporting and more on fees and compensation disclosure. Let's look at the issue of fees and how these are explained to clients. I have a sense that for some people, percentages are not perceived as real money, but telling somebody they paid $5,900 in fees last year is more meaningful.
Absolutely. People like to know what value they're getting for their money, like whether they've a written financial plan and are getting estate tax and retirement planning advice, or are they just paying for investment advice? So it sounds like this could actually help a lot of investors.
I believe it will. One concern I've heard is that the new disclosure rules under CRM2 could actually deter entry-level investors from investing because they might want not to pay for advice. See, let me try that again.
Yeah, right from the top.
One concern I've heard, the new disclosure rules under CRM2 could deter entry-level investors from investing because they might want not to pay for advice, seeing it as an opportunity to save fees rather than focusing on the advantages of investing and the most appropriate investment options.
Well, Jim, over the past several shows, you've reiterated how most investors across all age groups and income brackets build more wealth when they work with an advisor, and those figures were quite substantial. Do you feel it's going to affect the way advisors do business?
I think advisors might answer this differently depending on how they offer their services. A concise description of how the advisor works is important. People need to become knowledgeable about these issues. It's their money.
Absolutely. As people get a better handle on what they're paying for, they can make better decisions about maybe what they need or what services could be made available to them.
I think it's the not knowing part that hurts and can hurt investors the most.
So, Jim, how would you define a good client engagement?
Well, for me, I think that's a great question. A good client engagement is when someone comes in with a bit of knowledge and has read up on things. It makes for a stronger relationship.
You know, Jim, I think a stronger relationship is what we're all here for.
Well, it really starts in the initial meeting. Finding out what you offer, how you do it, how you charge for it takes a good amount of time to explore. Some want help that is limited to facilitating investment purchases as efficiently and inexpensively as possible. Still others want their complete financial picture looked after.
Well, what do you actually mean by looking after their complete financial picture?
I'm glad you asked that. In simple terms, it could mean everything from cash management to investment selection, risk management to estate planning. It's also about creating a plan, implementing it, and having a defined, predetermined review process.
So is there any risk that Canadians may unknowingly only be getting components of a plan? Isn't this sort of like making a cake without like a key ingredient like eggs?
Hey, listen, I love cake. Okay.
Of course.
I also liked Rob Carrick's recent article in the Globe and Mail entitled, "The Hardest Words to Say in Personal Finance I Don't Understand."
Oh, this was the article about a recent survey done on behalf of a wealth management company. They tossed out a bunch of phony investment terms, and quite a few of the survey participants thought they were actually hip with the lingo.
Now, it's possible some of the people in this sting were honestly mistaken.
Well, one of the phrases that caught my eye was the term white chip investments. To borrow Rob's words, why are we so reluctant to admit our ignorance and ask a simple question?
I still find some clients apologize when they don't understand something.
Oh, I do.
It's about creating an environment of trust. Saying you don't understand is actually empowering. I truly, truly value questions because I want a two-way discussion. I don't want them to give up control. And here's another one of those myths. Having a financial planner, how do I put this, okay, doesn't mean, no, sorry.
You can start from having a financial planner, or you can start at the top.
I'll start from having a financial planner. Having a financial planner means I don't need to learn anything about investing. Looking back, if they work with me for a decade, I don't simply want them to be 10 years older. I'd like to believe we've helped them build their investment and financial knowledge so that they can make more and better informed decisions over time. Be engaged. Be involved.
Well, it's good advice, but it appears more often than not there might be a little unwillingness to question advisors and planners.
It pains me to say this, but yes, I agree. I think it comes down to folks not knowing and being embarrassed to admit that they don't understand what is being talked about.
Well, here we go back to maybe being too polite to say, hey, I don't really understand what you're saying or talking about. Maybe asking the question, could you say it in a better way so I can understand it? Can you rephrase it? I don't think we can actually be expected to understand. We're not the ones who went to financial planning school.
I think it's about giving you things in the ways that work for you. Advisors and planners offer extremely useful services. In the end, advice is a service and investments are products. You navigate the purchase of products and services all the time, whether you're having work done in your home or you're buying a new car.
Good point. I think when it comes down to financial services, when outcomes can be hard to predict, comfort levels can actually go down.
There's a lot of information being shared back and forth between the advisor and the client, and I don't think that it's always clear to the client why that information is being talked about. Part of the fear of not knowing what you don't know will likely sap your confidence.
Jim, it's great to hear about how you can take the time to get to know your clients and actually show them very specifically how you can help them.
We explore what's important to you, your values, how money was handled in your home growing up. We'd like you to be as comfortable as possible.
Drilling into their deep-seated feelings about money, money is personal, and your advisor relationship should acknowledge that.
We explore your specific aspirations and the opportunities available to you that we can help you uncover. If we're doing the same things as everyone else, I think we're letting you down.
So after spending time and learning about the individual or couple, you then can see if you might like to work with them?
Well, not quite yet. I'd like to talk about the services we offer, maybe suggest a few that could help their situation right away, and maybe a few we could like to look at considering in the future. After talking about our fee schedule, I'd like to find out what services truly resonate with them. Investing time in the initial discovery meeting provides a chance to make sure that we're a good fit for each other.
It's worth the effort. Is your process finished there?
Not quite. It's about engaging you on your terms. Finding out how and how often you want to be contacted sounds straightforward until you consider just how many different ways there are to connect. Do you want to do it in person, face-to-face, by phone, electronically? What works for you?
Well, we all live in a very noisy world and people are extremely busy. How do you, in your practice, make sure that your messaging is relevant?
What we hear from clients is it's about communication. We feel it's important to ask how they want to be contacted and engage them on their terms. Clients tell us they really appreciate our efforts to provide them with material aligned to their needs and concerns.
Everyone communicates, yet very few people connect. What do you think it is that the most effective people do that's different?
I can't speak for everyone, but I do believe some things are essential for connecting with people. Things like, do you care about me? Can you trust me? Can you help me?
Anytime that I want to genuinely know more about another person, to me it's all about finding common ground. I think that's a good place to start.
You've heard the story of how two parents raised a child together in the same household, enforcing the same rules. One parent gets cheerful compliance. The other got resistance. Why?
So what things would you suggest for overcoming this?
People may hear your words, but they feel your attitude.
It's a great point, Jim. People may hear your words, but they feel your attitude. This is Boomer Life on CL 650. I'm Joanne Sutton, and thanks for joining us today. We are speaking with JimeDoyle, Senior Financial Consultant with Investors Group. And if you're concerned about ways that you can make your savings last, maybe it's time to reach out to Jim. It's easy. Just give him a phone call, 604-682-5431. Or you can send him an email, jim.doyle@investorsgroup.com. Next up, the advisor's role, the importance of communicating value. Jim offers his tips on essential conversations that you might be missing out with your advisor. That's next on Boomer Life on CL 650.
Celebrating the baby boomer lifestyle. This is Boomer Life on CL 650.